Hello, everyone, and welcome to our fourth event of 2021, Checkup for Your Financial Health. My name is Lindsay Hemmings. I spearhead Fintech Female Fridays here on the NYC Fintech Women team. You may be familiar with our organization and our committee. If you are new to NYC Fintech Women, welcome. Our mission is to connect, promote, and empower women and their professional development in fintech. We are a community of more than 6,000 members across New York City and also all of America. And now we are international, which is very exciting. We have gone completely virtual since the pandemic. We feature topics and events that are relevant to fintech. We are also open to any and all feedback. We are here to support you and want to know how we can continue to do so. Whether it be your career goals, professional goals, sponsorship goals, networking, or anything else, feel free to reach out to us. If you are not yet a member, you can sign up today at nycfintechwomen.com. I'm now very excited to introduce our event today, Checkup for Your Financial Health. And we want to give a big thank you to tonight's sponsor, Haven Life. Thank you for your continuous support. We have an amazing lineup of panelists, and I'm now going to hand it over to Tess Bloch from Pinwheel, who's moderating the panel.
Hi, everyone. Thank you so much for coming. We're really excited to have you here and introduce our panelists. Before we start, we're just going to open with a quick poll. So please fill out that feedback. We'd love to hear from you. And we will get started in a moment. All right, I'll have everyone just continue to fill out that poll. And as you do it, we'll just introduce our panelists. So as Lindsay said, I'm Tess Bloch. I am the Chief of Staff at Pinwheel, which is a payroll API company based in New York. And I will ask our panelists to just introduce themselves, give their name, what company they work at, and one sentence on what financial health means to them. So to start off, I will pass it over to Olga.
Thanks, Lindsay, and thanks, Tess, and everyone. Thank you for joining and watching us. It'll be a great panel. My name is Olga Stamatova, and I'm with Haven Life. I'm an account executive within our partnerships and distribution and strategy team. And what financial health is to me is having the ability to lead a healthy financial lifestyle and having the freedom to enjoy a life that you set out to.
Amazing. Thank you, Olga. And we will pass it over to Cameron now.
Thanks, Tess, and good evening, everyone. My name is Cameron Rogers, and I'm a private wealth advisor at Ellevest. And at Ellevest, we're helping women build wealth. For me, financial health is personal agency.
Great, thank you, Cameron. We'll go to Aneeta now.
Hi, thank you so much. I'm very excited to join you all virtually today. I want to give a quick thank you to New York City Women in Fintech for inviting me and Haven Life for the opportunity. My name is Aneeta Singh. I lead the partnership strategy at Prosper, which is a lending marketplace. And to me, financial health means freedom, financial freedom to meet my physical, mental, and social needs.
Amazing. And we will go to Holly now.
Thanks so much, Tess. My name is Holly Haynes. I'm the Director of Customer Experience at Better. We're a digital mortgage lender looking to revolutionize the homeownership experience. And to me, financial health is honestly holistic health. It's recognizing that you can't ignore certain parts of your health, and it's approaching it fully.
Great. Thank you so much. So we will kick it off with a question to Olga. So Olga, can you share a little bit more about Haven Life and how life insurance fits into your concept of financial health?
Great. Thanks, Tess. So Haven Life, or Haven Life Insurance, right? We're a New York City native insurtech. About 6 years ago, we set out on a mission to transform, revolutionize the life insurance space. And ever since, we've been doing exactly that. We've been rolling out fully digitized, instant decision, no medical exam required, term life products. We've been very active in sort of direct to consumer channels and also growing our partnership base. Fundamentally, right, what Haven Life is doing is we're rethinking how people financially protect the ones they loved, and ultimately we're committed to making life insurance accessible and inclusive for everyone. On that note, right, I mentioned, what financial health to me is, and that's the freedoms, the ability to sort of, lead the life that you set out to be. Like what that actually means on a daily basis, I think will be different across the gamut. But fundamentally, right, we all want to make sure that, we have the dream job, we have the ability to afford a house, we have the ability to afford maybe our kids' education, perhaps to retire early and enjoy, some sun in the Bahamas, right? It's not having to worry about your next day or maybe your next year or 10 years, or having to worry about, affording a health insurance, or maybe putting food on the table. There was a study, there's a survey done by Federal Reserve in 2019, and it appears almost 40% of American population would struggle with a $400 accidental sort of expense, unexpected expense. They won't be able to cover it, right, across all of their cash savings, across all of their, emergency savings, or maybe even retirement, or even credit cards, right? And that to me is scary, right? That's scary. We shouldn't have to go through that. We shouldn't have to worry about that. And that's what financial health to me represents, right? It's that right, that ability to, build towards that, specific kind of life, rather than surviving, you want to be thriving, you want to be enjoying it. And so with that in mind, financial health and financial planning go hand in hand, right? If you think about it, when we think of financial health, people always tell us, plan ahead, right? Spend, save, borrow, and plan. And so what you do today, right, will inherently, either help you build towards or detract you from what your plan is. And so with that thing, I always ask, and I ask everyone to take a moment and just think about it, what's that one thing that can instantly, right, that can instantly sort of mean that you won't accomplish any of your goals or the goals of your loved ones? If you think about it, it's untimely death. It's just that one risk, right, that we all carry with us, that instantly either pushes back or completely eliminates that financial health and that financial freedom and the life that you set out to sort of have. And so a financial plan without adequate life insurance, to me, is no financial plan at all. And so it's the ultimate hedge, right? We can't cheat death. Unfortunately, we're not there yet, but getting life insurance is probably the closest you will come to that. And so, kind of in closing, the good news is financial health is fluid, just like financial planning. It's never too early. It's never too, too late to start one. Same goes for, applying for life insurance, especially in this day and age where everything is so, it's pretty much a golden era of technology, right? And it's easy to get, life insurance these days. It's easy to apply. It's, once you're approved, a lot of policies are instantly issued. You're covered within minutes, right? So building a financial safety net doesn't have to be complicated, stressful anymore.
Great, thank you, Olga. That's so interesting. And I think looking at the results of the poll as well, we can see that kind of no attendees said right now their first priority is purchasing life insurance, but I think you made an incredibly compelling case. So hopefully some minds are changed there. But I know you talked a lot about financial planning, and I think Cameron is a great person to speak to that as well. Cameron, what do you see as kind of the biggest mistakes that people make when it comes to financial planning and managing their finances? And how does Ellevest help people avoid those and support them in being financially healthy?
Yeah, absolutely. And thank you. And, it's funny, as Olga mentioned, financial planning is so deeply important. And, I'm also aware that it's not a sexy topic. It's not NFTs, it's not Dogecoin, it's not insert, investment topic of the moment, but it is for all of the reasons that Olga mentioned, which I'm so grateful for. A common, I don't want to call it a mistake, but I'll call it a pattern, right? And I see it especially amongst women when it comes to financial decision making, whether it's on their own or in conjunction with a partner, is this idea of buying the book. So the thought process is, and I see it amongst very smart, accomplished women, but this thought process of, I don't know what I don't know, but I need to be an expert to figure out how to eventually outsource expertise. So I'm going to buy the book on financial planning. I'm going to read the book on financial planning, and then I'm going to be an expert so I can outsource expertise. And I'll caveat what I'm going to say next with a wholehearted belief that knowledge is power. There's no doubt about it. We should be laser focused on our own financial planning. The problem, however, with this buy the book thought process, and I'm sure I see some nodding, so I'm sure everyone has experienced this, is that the book is deeply boring. The financial planning book is deeply boring. And, this is coming from a financial advisor. So the book is boring, so we don't read the book. And so instead of eventually outsourcing expertise to a professional, we say, like, never mind, forget that plan. I am going to outsource decision-making to a family member, father, brother, uncle, partner, insert the blank. And in my opinion, outsourcing decision-making is very different from outsourcing expertise, because when you outsource decision-making over your money, you're effectively outsourcing agency. And when you lose agency and that money kind of comes back around to you, which it will, you will likely be surprised, perhaps a negative surprise, because you haven't had agency around that. So a common problem, it's a really hard one to broach, right? If you've outsourced that decision making, like how do you regain agency? How do you find it right now? I honestly think the last year and what's gone on during the pandemic has almost made, unfortunately, this conversation easier, right? Like the last year has affected the young and the old, the healthy and the sick. So even kind of coming back around, having a conversation with yourself, if you're doing this decision-making with a partner, whoever, simple questions around, how are my assets titled? How are we invested? What happens if something should happen to me? Going back to, Olga's remarks are really important. And I would say that's a starting point for addressing that kind of common pattern that I often see.
Great, thank you, Cameron. We got a great question from the chat asking if people don't find it boring, if people find it interesting, or after hearing from you of how important it is to engage, what are some ways to start learning? And the other panelists should feel free to jump in as well.
If you don't find it boring, amazing. I would say find your people who distill, whether it's investment concepts, financial planning concepts into language and kind of themes that resonate with you. Like find those people, whether they're on podcasts or whether they're on TV or whether they're kind of on social media, and like follow them and understand how they distill these topics. And maybe one thing that we can all do, and I'm sorry for taking up the discussion, but maybe all of us can send those individuals that personally resonate with each of us after this panel and distribute it to the broader group.
Yeah, and if I can add, Tess and Cameron, I think to that one, for me, I wholeheartedly agree with, the financial education. To me, it's like, the best inheritance in a way, and step one. I think Twitter has been, an eye-opening experience for anyone who's probably not familiar with, the degrees of financial planning and when they should look like, right? It's a wealth of information. So I think anyone who's on Twitter, should just go ahead and check it out. There's so many people who talk about different types of investments, different types of financial plannings, right? And if you even get one seed, you can then go and run with it. Like Cameron said, whether it's someone else in your sort of immediate circle, or it's more books, things like that. But that is just, starting. I think step one is also kind of the most important one.
Yeah, absolutely. I think those are both great ideas. I wanted to follow up on one thing that Cameron said around kind of people not understanding what is involved, so being kind of scared to engage with it. We see that a lot. Pinwheel is a payroll API company, and what we do is sort of unlock the information and functionality in payroll accounts and let banks and lenders use that information to sort of facilitate people taking control of their paychecks or enabling fair loans. And I think one thing that we see often scares people is kind of credit scores, because most people don't understand what actually goes into a credit score, right? It just seems like this black box you put in your information and a score pops out that you don't necessarily fully understand, and understanding what drives it is so difficult. At Pinwheel, we kind of help you take control of that, take control of your finances, and take control of your data by giving you access to understanding where your money comes from and letting you direct it. So whether it is taking your paycheck and allocating it to a new bank account, whether it is sharing the information in your payroll account so that the credit score or a lender decision can actually be based on something that's more tangible, like what your job is, how long you've been there, what your paycheck is, how much money you have on a regular basis. Those pieces of information are all in your control, and they're something that lenders can use. At the same time, I think kind of on the topic of financial health, it's also really important for you to take control of your own credit score. And I think there's a lot you can do kind of proactively to improve it. So Aneeta, can you tell us a little bit more about Prosper and how online lending with Prosper can actually help you improve your credit score? I would also in particular love to hear kind of how digitization and technology is leveraged in a similar way to what we do at Pinwheel to help consumers take control of their finances.
Yeah, absolutely. So Prosper's mission is to advance your financial well-being. And the way we do that is by providing resources for you to be able to consolidate debt and improve your credit score. So I collaborate with other leaders across the industry to introduce Prosper's products to consumers with the intention of carrying out this mission. When you think of a credit score, there are several factors that can impact your score, right? Including payment history, length of credit, history, types of credit. And one that we can tackle head on is revolving credit utilization, or the amount you owe, the amount of debt you have. This last one particularly makes up roughly about 30% of your FICO score. And a personal loan can serve as a tool to help improve this aspect of your score by allowing you to not only consolidate your debt into a simple interest installment loan, but also potentially save on interest and reduce the amount owed over time. When Prosper first launched, this idea of applying for a loan online and receiving an approval within minutes was truly a novel concept. In order to get a personal loan, consumers, people like you and me, would physically have to go into a bank and apply in person with an agent. As pioneers of the peer-to-peer lending space, and I do want to apologize if you hear a crying newborn, because we do have a newborn here today. We were at the forefront of this technology, offering a space to consumers to not only borrow, but also invest in their peers. So we turned an often harrowing process of tackling debt into a simple, fast, and easy one. And consumers today can tackle these challenges of revolving utilization within minutes by applying for a personal loan online, viewing their offer very quickly, and receiving funding in as little as 1 day. So we've now taken those last 15 years of expertise and are applying our learnings to help digitize the HELOC process for consumers. And really for us, the way we can help advance consumers' financial well-being is by using technology and digitizing manual processes to make that process for them the painful, lengthy process, really, and making it into a more automated and simpler process is really what we've done. And what we see again and again is our technology has aided consumers who need help in not only getting better rates than their existing debt, but has also simplified their lives, right? They leave with a simple interest installment loan, their credit improves, they're in a better place financially and well positioned for their next goal, whether it's a large purchase, a vacation, or getting an approved mortgage, which I believe Holly can really touch on for us.
Yeah, absolutely. I think that is such a great point, and kind of the way that technology has enabled, first of all, increasing financial inclusion by letting people have access to fair credit based on a variety of information. And second of all, just made lives easier for consumers and lenders alike is so important. Holly, I'd love to hear from you how you think technology impacts financial health and how Better has used this to help consumers.
Yeah, I love that question because I think it's crazy to think that there was ever a time where they were separate, right? Tech is so much a part of our lives. To think that we wouldn't involve tech in what is arguably one of the biggest financial transactions in your life is, I mean, I don't know to you, but it's definitely crazy to me. So that's what I love about Better. So at Better, we are a digital lender. We're looking to, give you access to the mortgage experience fully online. What's so great about that is that you can access it literally anytime, and it's incredibly convenient. If you want, you can literally pull it up on your phone, just like you're doing everything else that you do with your phone. So it's incredibly convenient, literally can access anytime. On top of that, I think what's been so great with the product we've been able to share so far is something that is very much transparent and is something that makes this process seem a bit more clear, and definitely makes it a bit more, I think, something that can be understood by the average person. Speaking for myself, before I personally joined the mortgage industry, I honestly did not know a thing about it. And I had no desire to learn anything about it, even though I very much one day saw myself as somebody who could own a home. And by joining Better, I understood that I finally began to understand, honestly, that it was so important to know what was going on with my financial health. Even if I wasn't ready to buy a home today, it was something that I should have been working on literally since day one, from when I opened my first credit card and started to build my credit score. So I think what I love about Better now is knowing that we're providing a product that any potential homeowner, whether it's your very first time looking to buy a place or it's your 10th time going through the process, this is something that you can use to get a better understanding of where you stand when it comes to your financial health, right? You get better insight into what's going on with your credit score, what's going on with your income, what's going on with all the different pieces that we need to take into consideration when you're looking to buy your home. And we make it easy for you to understand. I think another thing too that is so important to note when it comes to the tech piece, and I think we do a really good job of balancing here at Better, is that we've created this product that is something that honestly you could go through and never really talk to a person. It's like designed for that classic millennial who like never wants to get on the phone ever. But what I also love about Better, is that we've set up a team of people who are here for you if you are looking to connect with somebody who can provide that insight and provide that advice for you. We actually have non-commissioned loan consultants that can connect with you, can provide that insight, provide that guidance, provide that advice for you. And I think the best part of all of that is again, that they're not commissioned. They're really giving you advice that's in your best interest and is looking to help you move forward.
Amazing. Thanks, Holly. I think that's going to be super helpful, especially to the 20% of our audience who said buying a home is their top financial priority. So I want to kind of pivot back to life insurance, which was the bottom financial priority at first, but it seems like, Olga, you've convinced someone because someone has asked, what should I think about when looking for the best life insurance policy for me? So I would love to hear a little bit about, one, why you would recommend life insurance to people who are interested in financial health, and two, how to approach a topic that people might not know much about.
Sure, and thank you for whoever asked that question. To me, it's an epitome of sort of, where life insurance kind of industry is and where the millennials and the Gen Zs are, right? There's a bit of that sort of gap as to, we're all used to thinking and hearing that you get life insurance as you're older, more established. A lot of times we hear that life insurance is for your end of life expenses, right? And perhaps when you get a child, make sure that their 529 is all set and they can actually afford going to college should anything happen to you or your partner. But in fact, I think that financial literacy, that educational around life insurance is so important. And I think, that's why I think Haven Life is leading sort of this game, because education is key, right? We educate our customers and to anyone who essentially asked that question, right? Life insurance is versatile in its applications, right? Some of them are, yes, absolutely obvious. You get a mortgage, you want to think about life insurance. Maybe you have some co-signed debt, you want to think about life insurance. A few things that people don't know, right, is one of the applications is on the business front. A lot of us, right, are starting our startups, hopefully, or maybe dabbling into sort of like little small businesses and ventures that we're building out. So life insurance, actually having a life insurance as a founder, as an owner, increases your chances of getting a loan, right? And it makes capital raising for your, for your business so much easier, right? And it increases those chances. The same goes with partnerships, right? If you were in a partnership agreement with, 2 or 3 or more people, should anything happen to that partner, right? If they had a life insurance, typically that takes care of all those, buy-sell agreements, taking care of business continuity. These are the things that I think people don't think about. Definitely not in their 20s, but I think this is where that financial planning should come in. Just like when Holly mentioned of, hey, yeah, I want to own a home, but why didn't I think about that? So I think it's just sort of unveiling, demystifying, destigmatizing, I think, life insurance, and that education piece is crucial to me. And so, like I said, there's a variety of applications as to what life insurance should be used for, right? And it varies across the age, right? Because all of us come from different paths, from different backgrounds, right? From different financial, education lifestyles. So how does, if you think about it, for someone, it might be better to get maybe whole life insurance versus term insurance, right? For someone, it might be better to get, a 10-year versus a 30-year, right? Again, the coverage is different. I always use an example before starting with Haven Life. I was exactly that. Life insurance? No, I'm going to live to 100 years. COVID hit. I'm like, let me rethink that strategy. But also, but then if you think about it, your pet has insurance, your phone, you don't leave a Verizon store without an iPhone insurance, right? Like, why do you not think about yourself and put yourself first, and also your loved ones, and kind of say, hey, this could happen? A lot of times, especially I think single people go, well, why do I need this, right? Like, maybe I'm mortgage free, I don't own a house, I don't have a family. You can always take a life insurance should anything happen. And then when you become, when you sort of have like more, established kind of like ecosystem around you, you can also add, or maybe you can renew and get more life insurance, right? So it's not, all or nothing, right? And I think that aspect is very important. When it comes down to sort of like thinking about life insurance, specifically on that.
Great, thank you. I think that's super helpful. I want to kind of pivot to, from there, the question around buying a house. We've got a question from someone who's said, in around 2 to 4 years, I want to buy my first home. What are some things I should start thinking of now? And our lender is going to look at me differently as a single woman not far out of college. So would love to hear thoughts there, especially if life insurance is one of them.
I'm happy to hop in here. One, whoever submitted that question, that is amazing. Congratulations on taking the first step, which is deciding that one day you want to own a home. That's incredibly exciting. In terms of what you should do to set yourself up for success, honestly, you should start looking at your finances today. I think one of the biggest things I learned when I joined Better. So when I first joined the company, I actually worked directly with our clients and was advising them on what made sense for them as they were going through their journey. And what was crazy to me was I would work with people who were first-time home buyers, had never gone through the experience, literally had no idea what they were doing. And then I would, go to my next appointment. I'd be working with somebody who this was their 10th time going through a refi on their 5th home. They were experts at it. They didn't really even need me to help them with anything. And the crazy part was that the same questions that first-time home buyer would ask were the same questions I saw coming from the people who were looking to refi. Oftentimes, even the first-time home buyer, because they were so nervous, were doing so much research, they actually knew sometimes more about the process than that person who was going through the refi. So I think, it's incredibly important to make sure that you are taking the time to really understand the different pieces of what goes into getting a mortgage. Make sure that you're getting on top of your credit score. Make sure you're getting on top of your finances. If you have student loans, because I think you mentioned that you're fresh out of school, make sure you've got that under control. You want to pay those down as soon as you possibly can. And I think even more importantly, it's also really, really, really important for you to recognize that it's critical for you to understand, for you as an individual, what your situation looks like. There is so much information out there when it comes to buying a home. A lot of it is really generalized. Take the time to really understand your specific situation. Something like our pre-approval at Better, it's a 3-minute process that goes through all the different parts of your situation. It'll give you an understanding of what you qualify for, specifically for you, based on what your financial health looks like today. even if you're not looking to buy in the next month, even if you're not looking to buy in the next 6 months, it can at least give you an idea of where you are to help you get ready for when you're ready to actually pull that trigger.
And to piggyback off of that, Holly, I think when looking for mortgage, I always give an example. A lot of people don't know that, life insurance is often actually cheaper than getting homeowners insurance, and people don't know that. And for someone who doesn't know that, and they could be a first or second time buyer, right? That just sort of, sort of passes straight through, and then all of a sudden they keyed in for much higher premiums, right? So I think doing research, like Holly said, and kind of making sure that you understand all your options, and perhaps like you look at your financial planning and you say how everything fits in, is key before kind of, going and jumping all in.
And from a financial planning piece, I always work with clients to have a really definitive sense of the timeline, right? Because if you have underlying investments that will one day fund the down payment, it's good to know kind of like the timeline of that, because if that timeline is a year and you will need that money for a down payment in a year, that money should not be invested in the public equity markets, right? The kind of like tenor for the hold of a stock, how long you should really think about your ownership of a stock is 3, 5, 7 years. So if someone's really thinking about that, we kind of rejigger their investments to say, okay, let's, move this into sort of more of a capital preservation type of investment, so that when you do need to make that down payment, the probability of that pool of wealth swinging in value is very low.
And that's exactly when something like a personal loan or a HELOC can help consumers as well. Like if you have a 5-year plan and you have a revolving debt or a student loan debt or, general debt that you want to kind of consolidate and pay off, so that you're in a better position with your credit score, in a better position to be able to make the down payment that you want to make for your first home, your second home. Like that's when you need to start considering your options and really go shop. One of the great things about personal lending being digitized is checking your rate does not impact your credit score. I check my rate multiple times a week simply because I'm in the business, but it has absolutely no impact on my credit score. It does not impact the process at all for me. So it's just a great way to keep yourself educated and know what your options are. Know when you're getting a better rate. Maybe Prosper has lowered their pricing in the last 6 months. Just continuously checking your rate is a great way of weighing those options and better preparing yourself, and also being open to taking that opportunity when it arises to elevate yourself and get yourself closer to the goal of buying a home and getting approved for a mortgage.
Absolutely. Yeah, I think we had a couple of questions following up on those. I'll start with kind of the credit score questions. What are some really tangible ways that people can improve their credit scores to kind of get to the place that you're talking about?
I'm sorry, you broke up. Could you repeat that?
Yeah, absolutely. What are some tangible ways that people can improve their credit scores? I think you've mentioned a few, but any other advice? There were a couple of questions there.
Yeah, absolutely. I think the one thing you want to do is do a full assessment of your credit score, right? So we talked about how revolving debt is a big piece, but something else that falls into that is the number of credit lines that you have, right? If you have a thin credit profile, so you don't have a credit card, you don't have a student loan or auto loan, when you're applying for a lending product, that's going to be weighed into that. So one thing that you want to keep and be mindful of, and sometimes it seems counterintuitive, is you want to make sure you're actually maintaining different lines of credit, right? Whether it's a credit card, a student loan, an auto loan, those things actually help build your credit. And if you use them favorably, they work for you, right? So you want to make your credit work for you and elevate you, right? Because a thin credit file is also going to be a problem. So you want to weigh and make sure you have a very balanced portfolio. And the way you do that is really by going out. There are a ton of different fintech blogs, fintech websites that actually focus on educating the consumer. Some of our partners like NerdWallet, Credit Karma, Prosper, we have blogs that talk about the different ways that you can improve your credit score, the different ways that you can advance your financial well-being. So I always think of the first step as being education and not being afraid to actually look in and do that credit health check, right? Like we go to the doctor annually. We're like, okay, every year I should go and have a physical and make sure I'm okay. Even though we might know like, hey, I'm feeling fine, everything's good, I'm sure I'm gonna check out, we wanna go do that health check. So you wanna do those health checks pretty regularly with your credit and your overall financial health.
Great, and on that note as well, to Cameron, how can people best determine the appropriate kind of investment plans for them? And how can they identify the right people, as you were talking about earlier, to help them do that?
Yeah, it's a good question, and it goes back to this idea of what are you funding? What are you solving for? Like I always get very nervous when people come to me and say, what should I be investing in? Because I come right back to them and say, what are you solving for? And that very much dictates your financial plan and proposal, right? So it's what are your shorter term goals? What are your longer term goals? Are you cash flow positive? Are you cash flow negative? If you're cash flow negative, what's kind of making up that deficit? Are you protecting your family? Are you set up in a way in which you're creating generational wealth? So I know it sounds silly, but it really starts with you from a financial plan perspective. There are different ways to think about and to think about how to divvy up your money between needs, wants, and kind of long-term saving. And I'm happy to talk about that, but I would really start with you. From a financial advisor perspective, I think a lot of people, it could be DIY, you could do it on your own, but what I always mention to people, so I'm New York based, and I actually work with a lot of professional investors. So a lot of my clients are actually professional investors. They're in private real estate, they're in venture capital, which sounds very counterintuitive, but if you think about it, they're kind of spending all their time and energy and brain power kind of doing their job in a way where they just don't have time for themselves. And so I think you have to understand what you can do on your own, what you have the capacity to do on your own, and what you may need to outsource. If you do begin to look at for a financial advisor, and I have a series of questions, and we can maybe send these around as a follow-up. I would always ask these set of questions. So one, is your financial a fiduciary? So are they legally obligated to put your interests before both theirs and those of the organization? Fees, what is your fee model? Are there economies of scale for me as a client? Who is your custodian? So basically, where do my assets live? What is the investment support model? So who is managing my money? How often are you rebalancing my portfolio? Are you investing tax efficiently? How do you define client success? In addition to that, I would ask what the service model is. So what's the service model? How often should I be reviewing my investments with you? And is financial planning part of the service model? A lot of our clients at Ellevest come to us because they're focused on impact. So investing for impact and investing sustainably. If that's a focus for you, I would definitely ask about that and ask, as a client, how do I know, like, what is your reporting framework look like? And then, and this is, powerful and important, but, what does your organizational structure look like? Who's at the top? Like, how are you committed to diversity and cognitive diversity at the company level? And how are you promoting that? So those are the questions. I literally, like, if I'm talking to a prospective client, I hand them the question. I say, I'm willing to answer every one of these questions, but whoever else you're talking to, run them by them as well. And I think those are powerful tools to make sure you're aligning with the right investment partner.
Great, thank you so much, Cameron. I think we've covered a lot. I think we obviously all have sort of work at companies that have a broad range of products, from life insurance to investing to Pinwheel, which sort of focuses on kind of unlocking access to data and giving you control over your direct deposit. I think the thing that connects all of them is really that they're sort of complementary aspects, right? Financial health is about more than just one element. It's about taking control of every part of your finances and bringing it together into a cohesive plan. On that note, I sort of want to end on asking each of the panelists some questions about their overall approach to financial health. So 2 questions for each of you to answer. One is, what is one step you wish you had taken earlier to improve your financial health? And 2 is, what advice would you give to people, particularly women, who just don't know where to start? So I will start off with Olga.
Sure. I think what's the one step? I think educating myself on what financial health is, what financial planning is, holistically, how it differs in different sort of decades and milestones across your life. I think that's very important. You know, I'm a classic millennial, but I every day find myself, you know, like Cameron was saying, okay, maybe I should talk to someone actually, because, you know, DIY only gets me so far. And there's a variety of questions that I can't answer, whether it's tax implications, whether it's something else. So financial, you know, education is big for me. And then what advice? I think start early. Right? The early, the better. And that goes for a variety of reasons, regardless of whether we're talking about life insurance or investments. And I think I'm with Cameron on this one. I think getting a financial planner early on will set you apart and will only, you know, sort of get that path onto, you know, making sure that your goals are hit every year or every couple of years, and you fundamentally, you know, end up having a life that you wanted to. So I think getting a financial planner and sort of starting early, and perhaps breaking down kind of your goals again, you know, to echo what Cameron said, like, you know, look at it like a 5-10 years. Where do you want to be? Where do you want to be financially? I think those would be big, and I think they're beneficial for everyone.
Great, thank you. We'll go to Holly.
Yeah, I think that's a great question. The first piece here is what did I wish I had started doing earlier, Tess? So yeah, I think I would agree with Olga. I would say something that I wish I had started doing earlier was just getting myself educated. For a very long time, I think it was an excuse, but I use the excuse of, you know, I'm not a mathy kind of person. The numbers, they're hard. It's boring. This isn't cool. And I use that as a way to get out of just not sorry about my puppy. You can hear some people in the hallway, but I use that as as an excuse to get out of having to spend the time to learn more about the process and learn more about my finances. And when I joined Better, I truly learned the importance of having a really good understanding of every part of my money, because nobody was going to do it except for me. And if I wanted to move forward, it was in my hands to take charge and to do that. So very much, I think that is something that I wish I had started earlier, but I'm happy I started today. And I think the second question is, what would I recommend people do? So yeah, so what I would recommend people do is literally start today. You leave this session today, don't close your laptop. Go to another site, pull up your credit score, understand what's going on in your finances, start educating yourself, because if you're looking to do any of the things I think that any of our panelists here do with our companies, it's all going to depend on your financial health. So start today.
Great, thank you, Holly. Aneeta.
So I'm going to mirror a little bit of what Olga and Holly said, and I think they're on the right track. You know, for me, what I personally wish I started earlier was investing. I, at a young age, found it very daunting, and you know, what I've learned later in life is you just got to start. Like, you've just got to do it. You can start small, and there's nothing wrong with that. And I think oftentimes we think we have to know everything before we get into investing. And I think as women, especially, we're so hard and critical about our knowledge, and we want to be just, you know, fully in control of everything at times. And sometimes it's you got to start and learn, right? Educate yourself, but get started early. You know, take some small risks that you're comfortable with would be one thing. And then advice generally to women who don't know where to start all comes back to education. Talk to your friends, check out these blogs. They are all over the internet. You've just got to look up credit health. You've got to look up, you know, personal debt. Anything that you look up and educate yourself with is going to help you get closer. I think the starting point for everyone should be doing a full assessment of your credit health and then prioritize based on what that health profile is. Like, are you in a position to start investing, or do you need to pay off some debt? Make sure you have life insurance, especially if you have children or are getting into new ventures with partners. All of these aspects are very important. And I think you have to keep a holistic view on your overall health to feel confident in life and feel like you're secure.
Thank you. And Cameron?
Okay, what I wish I had known or done, I wish I had normalized money. I wish I felt okay normalizing money. I felt like when I was coming up through my career, a lot of the advice was, don't talk about it, it's poor form, don't do it. And, in retrospect, a lot of people were talking about it, and they knew their worth, and they used the fact that they knew their worth as power. And it took me a little while to figure that out. And it was a stark realization when I figured it out, but I would definitely recommend that. And, that's what we're about at Ellevest. We're normalizing money. We're making it so that, that question of how much are you making, not so like jarring. It still feels a little jarring today. In terms of what I would recommend, what we're solving for at Ellevest is the gender wealth gap. A lot of things affect the gender wealth gap, including wages and earnings and investing, and that's where we, really hang our hat. I would, for this group, just understand things that affect that wealth gap, because they impact us all and they actually span across this whole group. So, wages, investing, both wage disparities and caregiving influence the wealth gap. Because if you think about this, and we saw this over the last year, if you're earning less and you're the primary caregiver and something like the pandemic happens, the logic goes that, you leave the workforce. Financial education and coaching impacts the wealth gap and access to that. Barriers to building wealth through business equity impacts the wealth gap. Barriers to building equity in a home impacts the wealth gap, as well as certain lending practices and predatory lending. So you literally have a cohort of women or just individuals on this panel who are impacting all of this in many ways. So I would, take whatever nugget really resonated with you of all those things. And to your point, don't close down your computer, keep the screen open, and, do some research or find us, and we're here for you to build on the wealth you've created and will continue to create.
Great. Tess, any last minute questions before we wrap?
No, I think, Cameron, that was a perfect note to end on. So I will hand it over to you, Nicole.
Awesome. Well, first of all, what a comprehensive perspective that all of you gave. This was just absolutely fantastic, and actionable steps that we can take today. Like literally today, there are things that you all provided to us. So NYC FinTech Women, thanks each and every single one of you for joining our panel. Olga, Haven Life, oh my gosh, thank you so much. This has been just such a great session, and we appreciate you so much for all of your hard work. Last thing to mention, we got a lot of cool stuff coming up. Finovate Spring is happening in May, so hopefully you've seen that email. We just dropped 2 more podcasts, so check them out. Very, very interesting kernels of information. And we're launching Knowledge and Networking. So we are going to do 10, 15 minutes of a quick topic. This first time will be SPACs, and then we will just network and have a good time. So thanks again, everyone. Absolutely amazing panel, and you're just terrific women. So we appreciate it, and have a good night.
Have a good one. Thanks for having us.
Thank you. Thank you for having us. Have a good night. Bye.
Bye.